Now you want to catch trades like this, and you want to catch trades like this, but when you enter trades, this happens, and this happens. Now, if you want to be a successful day trader, you have to understand this one simple thing, and that's that price breaks out in trends about 20% of the time, meaning 80% of the time it stays within a same or similar range and doesn't really go anywhere. The reason price moves up high or down low is because of a catalyst. There's news, there's a fundamental change in the way that we evaluate the stock market or the futures contracts or any asset that you might trade. Now, in this video, I'm going to give you two separate strategies that you can use to become more consistent and more profitable and avoid giving your money away every time price gets choppy. Now, my name is Evan Scales, and over the past 18 months, I've turned just under $100,000 into just over $600,000 using these same strategies. On this channel, I'm going to talk to you guys about strategies I'm using, things I'm testing out, and what is to come in the future. I also have nqsignals.com. What that is an AI-generated signals for NASDAQ futures only, where I give you a new signal every minute, 2 minutes, 5 minutes, 10 minutes, 15 minutes, an hour, completely free. There's almost 1,200 members at the time of this recording. Hoping to grow that bad boy into 100,000 members. Hope you join. Now let's get into the video. Now, price likes to follow the 80-20 principle. 80% of the movement comes just 20% of the time. Price does not always go all the way up or all the way down or trend up or trend down. Oftentimes it doesn't do a whole heck of a lot, but then there's typically one day a week, maybe even just like a couple hours in a week where price makes all of the movement. And we want to be there to catch that, no doubt. But you have no control when that happens. Now this brings us to strategy number one, which is to sit out and wait. Wait for something to happen. Right now we're looking at a conflict in the Middle East. That is certainly a catalyst. We have nice price movement. Price is actually going down. This would be a great opportunity to jump in some shorts or try to find your spots and execute trades. But it's Tuesday and there might not be any good trades again until Friday or even next week. Now, if you know me, you know sitting out and waiting for things to happen is not really my game. I have a good strategy. I want to be in the mud using it as much as I possibly can. But some of you could benefit from just trading one day a week, taking a couple trades during an hour or two and calling it a day for good. Like there's nothing wrong with that. But if you're in the first category like me and you want to take more trades, then the rest of this video will be tailored to you. Let's get into that. Now we're going to be building a mean reversion strategy or just a reversal strategy. And these sorts of trading strategies work way better than breakout strategies because price doesn't trend all the time. Think about when you see price at a new high or a new low. The stats will tell you that price is more likely to reverse off of that low or come down off of that high rather than make a brand new high or brand new low. Now, I'm not saying breakout strategies are bad. In fact, I made most of my money trading breakout strategies. However, price tends to go flat for long periods of time and is mostly flat for long periods of time. So we need to have a secondary strategy that we can use, turn on, and be profitable when price is ranging, and that's what we want to build today. Now, this strategy is very simple. In fact, I'm recording this and I'm looking at this trade right here, and I actually really love it. Let me go to my Apex account, give me 3 contracts, and all I want to do is basically go short at these highs. So I'm going to sell right there, and typically I would use a limit order for this, but since we're here, we don't really have time to do that. And I'm going to just go ahead and trail this bad boy all the way down. All right, so here we go here. Price is kind of running. It's a little slow. Let's see. I'm on the wrong contract as well. I need to be on the NQU5, but we'll take it. So price going. All right, good. We're up 150 bucks off that one trade. That's basically the strategy. All we're looking to do is go short off of new highs and go long off of new lows. That's it. We want to buy low, sell high, and buy low. That's all we're doing. And so what we're looking at is every time we see a new high, or a new low down here, we just want to plot a line. And if you're inside of your trading account, these can just be limit orders, right? So I'll go to my TradeAvate account that we just took a trade out of really quick, and I'll go ahead and set myself a sell order at this high. And you can give yourself maybe like a tick, like 0.25 or so, just to make sure you've got room. But all we're looking to do is basically go long off of these bottoms right here, and then go short off of these highs up here. It's actually that simple. We might even be in this, we were almost in this trade. I set my stop a little, 3/4 of a point too high. We were almost in that trade. That was about to be money. All right. But all we're looking to do is go long off of these little bottoms here and then go short off of these little tops right here. Now, how do we know what tops and bottoms to go long and short off of? Well, that's a feel thing in a chart thing that you're on. Now, I trade the 1-minute chart. So looking at the 1-minute chart, all I really want to do is continue to find these new highs. And then when I see price like make a new high or kind of start to round out somewhere, I'm going to keep an eye on that and then put an entry somewhere near it. Now, to be safe and to avoid over trading, what I like to do is put my entries a little above that previous high or previous low, like the one you just saw right here that didn't get filled. This will help me stay out of trades and not take too much. Like, I'm definitely not looking to go long off of a move right here. This is not a level that I want to go long off of. But if price were to reverse all the way back down, then maybe something like here, maybe something even down here would make a ton of sense to me. Now, let's be very clear. We are not looking to capture the next move in the market, right? We are not looking to, we're in our trade now, we're not looking to spot the very next trend that's about to occur. All we're looking to do is capture a simple rip off of a higher move up. So let's see if we can capture some profit here. We'll kind of walk through this one a little bit, but I'm not looking to see price go all the way back down to these lows down here, or even like these lows in here. I'm not expecting that. Like, that would be ridiculous, right? I have a 4-point stop here. That seems about right. Let's see if we can slide our stop here. No, not yet. We'll kind of just have to wait here and see what happens. But we're not looking to capture incredibly large moves. That could happen just based on the way the strategy works out, but it's not what we're looking to do. All we're looking to do is capture a few points and then be about our day. So there's some profit there. I might try to lock in the next time we get something like that. Feels like we're sitting in the right spot here. Okay, kind of waiting around. Okay. All right, there we go. Good. Let's see what happens here. All right, not bad. So we're up 276 off 2 trades on this very simple strategy. I'm doing this live for you guys so you can kind of see it. And honestly, had I held this trade a little bit longer, we could have doubled or tripled up our profit pretty easily, right? And I'm trading 3 contracts because price isn't moving a whole lot right now. But again, I was not expecting that move, and that could be a move that you could catch for sure. I wasn't expecting that, but that could happen. What I'm not saying though is that you go short expecting price to like begin a little mini downtrend, right? Go short up here and price to continue a downtrend. Now, to be even more strategic, what would be really easy to do is to short off of the lows, or I'm sorry, short off of the highs when price is trending down. So obviously we have a downtrending day. It would make a lot more sense for you to like sell at these highs up here because that's the momentum. Sell at these highs up here because that's the momentum. Buying down here could make sense, but you could easily get washed out like pretty fast, and you don't really want that. So if we have a trend and we can easily see, then we probably just need to stick to one direction, right? Not the artist and group, just the trade direction, right? But if it's flat, then we can go ahead and do a little bit of both. Maybe this one's kind of trending up, so maybe I want to go long instead of short. I'm not really sure right there, but I know for here, certainly we are coming down, so I'm not going to be the kind of guy trying to be the smartest guy in the room. I'm just going to be the guy who wants to take the best trade in the room. And that's going to be taking shorts off of brand new highs that are made. So then what I would do here is this spot's kind of been money for me. Like, we're kind of sitting in this spot here. So I would even consider probably going ahead and selling a little above that. Now, I also know, and I'll probably break this into the second part, but let's just get into it right now. There are also what are called psychological levels. And even numbers in the market are psychological levels. So 22,000 as an example, you can see that right here. That's a psychological level. So I might want to put my entry up here knowing price might want to test this. If I'm looking at VWAP, which isn't on my chart right now, and price is kind of close to that, I might put my entry right above or below VWAP, depending on which direction it is, because I know price might want to go ahead and touch that really quick. And I want that touch and pull back, right? If it's going up, touch, pull back, or if it's going down, touch and pull. I want that because that's 3, 4, 10, 15 points that I could easily have by setting my entry at the right spot. So give this strategy a shot. You just saw me make damn near 300 bucks on accident. Now, at the time of this recording, I don't have anything on nqsignals.com built for reversal trades yet, but what I think I'm going to do is turn Iverson from kind of the meta signal, meta trend signal into, hey, reversal trade up here and reversal trade down here. That way we have a way of spotting really good trades regardless of what the market's doing, and we can have AI do all the hard and dirty work, and then we do all the fun work, which is place the trade and profit. All right, so I'll see you in the next video.